Intro: How to build wealth without daily market watching. Most people think building a $500,000 portfolio means grinding for decades, watching the market every day, and stressing over every drop in the stock price. But what if I told you there's a way to reach $500,000 with less than 2 hours of work a year? That's the lazy investor's approach, a proven system that lets your money grow without micromanaging it. In this video, I'll walk you step by step through how to set it up, how much to invest, and how to let compounding do the heavy lifting. You're watching NestEggROI, where we turn your nest egg into financial freedom. Section 1. Why the lazy investor method works better than active trading. Active investing. Trying to pick winning stocks, reading endless charts, and timing the market rarely beats the simplest strategies. Even professional fund managers underperform the market most of the time, and they have teams of analysts and millions in research tools. Lazy investing works because it removes emotions. Fear and greed are what cause bad decisions. It keeps costs low, which boosts your returns. It lets compounding work without interruption. Think about it like planting a tree. If you plant it and keep digging it up to check the roots, you'll stunt its growth. But if you plant it, water it regularly, and leave it alone, it grows into something massive. The lazy investor does exactly that. They plant their money into broad, low-cost index funds and let time do the work. Section 2. How much to invest each month to reach $500,000 now? Let's talk numbers. Because this is where most people realize how realistic this plan is. If you start from zero today and want to hit $500,000 in 20 years at an average 8% annual return, you'd need to invest about $800 per month. But here's the power of starting earlier. Start 25 years out. You only need about $500/month. Start 30 years out. You need just $350/month. This is why starting in your 20s or 30s is so powerful. The monthly burden drops dramatically because your money has more years to compound. And if $800 a month feels like too much right now, start with what you can, even $100 or $200. The key is to get into the habit of consistent contributions and increase the amount as your income grows. Think of it like a snowball rolling downhill. It starts small, but the longer it rolls, the bigger and faster it grows. Section 3. The best lazy investor portfolio for beginners. The lazy investor avoids chasing hot stocks or building a complicated portfolio with 20 different funds. Instead, they keep it ultra-simple and ultra-diversified. Here's a Model 3 fund lazy portfolio. S&P 500 Index Fund covers 500 of the biggest U.S. companies. Total International Index Fund gives you exposure to thousands of companies worldwide. Bond Index Fund adds stability and reduces risk. With these three, you own pieces of thousands of companies around the world, plus a safety net of bonds, all without picking a single stock yourself. If you want it even simpler, you could just buy a Total World Stock Index Fund and call it a day. That one fund invests in more than 9,000 companies globally. This simplicity is why lazy investing works. You don't waste time researching or second-guessing. Section 4. Automate your investing for zero effort. The real magic of lazy investing is automation. You set it up once and your wealth grows in the background while you focus on living your life. Here's how to do it. Set up an automatic transfer from your bank account to your brokerage account every month. Have it run right after payday so you never even see the money in your checking account. Invest it into your chosen index funds on autopilot. If your employer offers a retirement plan like a 401k or 403(b), take advantage of payroll deductions. That's automation at the source. This eliminates the need to remember, and it also stops you from spending that money on something else. Remember, laziness is a strength here, because once it's automated, the path of least resistance is to just keep investing. Section 5. Keep investment fees as low as possible. Fees are the silent killer of investment returns. They may seem small, like 1%, but over decades they can cost you hundreds of thousands of dollars. Let's put that into perspective. If you invested $500/month for 30 years at an 8% return with no fees, you'd have about $745,000. With a 1% fee, you'd only have $574,000. That's $171,000 gone just from fees. That's why lazy investors stick to index funds and ETFs with expense ratios under 0.10%. For every $10,000 you invest, You pay less than $10 a year in fees. Low fees mean more of your money stays invested and compounds for you, not for Wall Street. Section 6. Rebalance your portfolio. Once a year, rebalancing keeps your investments in line with your risk tolerance. Let's say you start with 60% stocks and 40% bonds. If stocks have a great year, you might end up with 70% stocks and only 30% bonds. That means your portfolio is riskier than you originally planned. Once a year, you sell a bit of what's overgrown and buy what's underweight to return to your original mix. This is a quick once-a-year check, no constant monitoring, no stress. You can even automate this with some brokerages or use a target date index fund that rebalances for you. Section 7, the math that gets you to $500,000. Let's go through the actual numbers. $800/month for 20 years at 8% return equals sign about $500,000. $500/month for 25 years equal sign about $470,000. And a little extra push gets you to $500K. $350/month for 30 years equal sign about $515,000. The beauty of lazy investing is that you're not chasing big wins. You're letting time and consistency do the work. It's not about finding the next Tesla or Amazon. It's about owning the entire market and letting the winners carry you along. Section 8. Avoid these 4 lazy investor mistakes, stopping contributions during market drops. Downturns are when you get the best deals. Chasing hot stocks or trends, they burn more often than they boom. Ignoring fees, a small percentage can cost you 6 figures over time. Overcomplicating your portfolio, more funds don't always mean more diversification. Bonus tip. Increase contributions over time. The easiest way to supercharge this plan. Every time you get a raise, increase your monthly investment by at least 1–2%. This way, you grow your wealth faster without feeling the pinch. If you start with $500/month and bump it up just $50 each year, you'll hit $500,000 years earlier than planned. Conclusion: how to start your lazy investor plan. Today, the lazy investor's plan isn't about doing nothing. It's about doing the right things automatically so you can focus on living your life. With consistent contributions, diversified low-cost funds, automation, and annual rebalancing, reaching $500,000 is realistic for the average person. Don't wait for the perfect time to start. The perfect time was yesterday, and the second best time is today. Even if you start small, starting is what matters most. Final call to action. Thanks for watching NestEggROI, where we turn your nest egg into financial freedom. If you're ready to start building yours, subscribe for more proven wealth-building strategies. And if you're serious about creating your own path to financial freedom, grab my free faceless YouTube automation toolkit and my $9 passive income planner. Links are in the description.